Alright, welcome back to the Big Long here. So, a few things I want to go over before I get into some charts is the margin debt balance has peaked in June. And looking at this chart, every time that margin balance has peaked, it has followed by a sell-off in the equity market. As you can see, the recessions are the gray blocks, margin debt is in red, as well as the S&P 500's in blue. So each one of the red dates that's marked is when the margin balance peaked. And then we have seen a sell-off. So this is something to be very mindful about as we get more and more into this pretty much mess right now that we don't know what's going to happen, what outside factors are going to happen next, and also you still have the Delta variant with Pfizer's vaccine coming out today, announcing that it is effective in kids from the ages, I believe, 5 to 11. And then another thing is the Evergrande not going to be able to pay its 300 billion in debt by today. And that's a huge thing, but that's not the only thing that's hurting the markets as the dollar rose today, hitting a multi-week high. But I don't really think that that's something to necessarily worry about at this point in time. The only reason being is because I think China China will actually teach the management there of the Evergrande some real harsh penalties. You might hear that some management teams gets thrown in jail in the next few days. You just don't know. But this margin debt balance is pretty interesting because this is huge. This is the correlation between margin debt balance peaking as well as the S&P. So what that means is when margin balance is decreasing, that means people are becoming more cash heavy. And if people are becoming more cash heavy, that means they're not investing into the equity market as heavy as they once were, right? So the fact that we peaked in June now, we're starting to see a rapid decline at this point in time. But Friday, we also had quadruple witching that happened that pretty much almost started it. But then you have everything else that is pretty much the intangible factors that you just don't know how to factor it in, right? You have consumers right now. Right now it's a mess. Are consumers spending the money that they should be spending at this point in time? Or are they actually not spending it and they're saving it because times are tough? And as inflation increases more, right? Because if inflation and prices are rising and people are spending more money but having less disposable income, then that's going to be a harsh thing to feel in your pocket. And this is why we're going to talk about it. So, China Evergrande, why are investors worried? Now, investors are worried. Why? Because they need to pay 300 billion in liabilities and only have around 15 billion in cash. How? How does the Chinese let that happen? I mean, it's been going on since the early 2020. And so the biggest thing is credit default swaps. And credit default swaps are pretty much when someone buys insurance on a bond that they will default on. So it's kind of, in the simplest form, it's insurance on a bond that will default. And that's actually like really big because the last time that credit defaults were a big thing was in 2008. Now, I don't necessarily think that we are at that point in time at this given time period, just because there's a lot more that goes into it than CDSs, right? So that's just something to be mindful on, as credit default swaps prices actually increased by, I think, somewhere between 10 and 16% today, which is a pretty big jump. But then again, in the overall grand scheme of things, it's not that bad. So let's get into it, right? So today we got the options, right? So unusual options activity. We got Apple, someone making a call bet that by the 24th of September, pretty much all of these, as well as Nvidia, is October, right? Going to see some pushes, right, up north. Now you could see the equity put to call ratio now is getting up to that higher range, hit a 52-week high now. So that 0.77 put to call ratio, that's I'm kind of looking out for that now, as the index put to call ratio is up 1.77, but now the overall market sentiment is over that 1. So this is where you need to be very cautious on what type of equities you're looking at. And this doesn't just go for single stocks, right? This goes for ETFs, this goes for mutual funds. Just because you buy ETF at this point in time doesn't mean you're going to make money on it. You could lose money on it. It just mitigates your risk and not throwing it all into one single stock. So that is something to be very mindful on as the most active options today. You had NIO, as well as Amazon, Baba, AMD, Ford, AMC, Tesla, Apple, and these have been the biggest traded options today. And all these stocks were down today. So what does that tell you? Either A, someone is trying to play the game the right way. So the fact that someone made a call about 143 expiring this September, are they expecting Apple to have a rebound back up? Or in this case, is Apple going to decline even more? So something to be on the lookout for, as 1.3 million options volume, followed by Tesla, and then NIO is in the last, remaining with 310,000. So to put the call volume, other than Amazon and Tesla, are pretty bullish at this point in time. There's a few that are somewhat iffy at this point in time, but you just have to be careful at what you're doing. So let's get into the heat map. So big red day today, right? I mean, healthcare was up, but you had the vaccine booster shot coming out of positive news from Pfizer. So other than healthcare, some REITs, a little bit of industrials down here. They not much has turned positive today. So even though it was a big red day, I mean, stocks haven't dropped over 5% in about like 8 months. So you can't just hit the panic button and be so worried at this point in time. But it is a skeptical point in time to be very bullish on it. Why? Because we have the FOMC meeting coming out this week. So that's going to be a key indicator of the near term on what we are doing. Now, do I think the Fed will start buying back their purchases? I don't think so at this point in time. We've had mixed economic data coming out. The job market still isn't strong like they would like to see. So I could see these Fed presidents still wanting to become more rich. And until I think Biden announces a new Fed president and kicks out Powell, we are going to see a juiced up market for quite some time. Now, the other variable that is playing into this is the debt ceiling. So that that is big because if the debt ceiling, right, doesn't happen, now there's few things that could happen. If the debt ceiling doesn't get figured out, right, the U.S. risk defaulting on debt, and which means lower credit ratings, which means a loss of billions of dollars. And it's kind of a game of chicken right now of who is going to give in first. I mean, the Republicans don't want the budget to go the way that the Dems want it, and obviously the Dems don't want to work with the Republicans on it. But if the debt ceiling isn't figured out between the two, there could be a government shutdown, and there is the potential of a catastrophic defaulting of 28 trillion of debt from the government shutdown. So this could be a very, very difficult situation to be in right now. And it's kind of worrisome, but things like this do happen. Now, who knows what will happen in the near future? Now, we had the dollar up, but the dollar occasionally rises when there's a market sell-off. But to me, in this market, you just can't be sure enough about what is happening, because tomorrow, who knows, we might have a huge green day, but it is not looking like that. As we get to the futures, we have the Dow, S&P, Nasdaq, Russell, and Nikkei, Euro. Everything's down other than the VIX right now. The VIX is up, and the VIX did cross over 25 today, and energy is a little mixed right now, as well as the softs, your commodities, the metals all up other than lean hogs, as well as some currencies, really only the Australian dollar. So I'm keeping an eye out on the commodity market. Why? Because the whole Evergrande thing with China. China is the biggest exporter in the world, right? So with them being the biggest exporter of pretty much cotton, plywood, petroleum, tea, all this different things will be a huge thing if this default really happens, not only for Evergrande but as well as the China as well as the U.S. debt ceiling not being resolved. So these are things I will be looking really close at as each day we get closer and closer to seeing what happens, right? So as we get into the markets, right? So we have the S&P breaking down below our trend line. And this morning I brought out that we were going to see possibly, I was looking at the 43 number to hold, about 43.80 to hold, and we closed at 43.57. So 43.57 is in line with July's pullback and bounce off the trend line. So we did gap down today over the 50-day moving average, well below the 50-day moving average, which does make me very cautious about getting into certain plays at this point in time in my long-term investment account. But trading, you'll always be able to find the winners, but that's the hard part, and that's what is the difference between a good trader and a bad trader, is that everyone can make money in an up market, but not everyone will make money in a down market. So as you can see, the S&P bottomed at 43.05 around what around 315. So since 315 it bottomed out and then rose. So that number, right? If you want to hit the low, now that corresponds exactly with that green candle from July 20th. That was the bounce. So we have dropped off since the previous all-time high of 45, 45. And now tomorrow, if we're looking at another decline in the markets, which hopefully we don't, I can see us really, I mean, looking at the weekly chart and the monthly chart, right? Like it's not terrible when you're zooming out, and this is why the old saying goes, when in doubt, zoom out, because your emotions could get the best of you. So looking at the the S&P 500 right now, the markets haven't dropped, the markets haven't broke. If we're looking at the daily trend line, right, the markets haven't broke this trend line in so long. So the fact that we're seeing this breakthrough, yeah, is it worrisome at the moment? Yes, but with the S&P being up over 100% since March 2020, it should happen, right? I mean, September is typically a volatile month because people are going back to school, summer's over, reality starts to set back in. So it's not the same as it is in Q2 and Q3. Or, I mean, I'm sorry, Q1 and Q2. Q3, towards the end, starts to slow down and becomes more volatile. So, at this point in time, I don't think it's anything to worry about, but it is something to be cautious about, because you don't want to just stick to one side. You have to see the both sides of everything. Why? Because of where we're at in the markets, and it's inflated, right? All this money has been pumped up, and the thing that people don't realize is, you think the rich are really taking out money at certain points? No, the rich aren't going to take out money unless they have a fear that they're going to lose some money. So what tends to happen is interest rates are at all at lows, right? So the rich, instead of selling their equities, they'll actually take out loans so that they don't have to pay the capital gains tax, right? And then they will use the loans that they took out, and they'll use their investments as collateral against that loan. So why not take out that money, that funny money, and throw it into the market, because you can. So this is things that people aren't aware of that do happen in the world. If you have money in the markets and you're a very wealthy person, why would you take out your money in the stock market if capital gains tax isn't high at that point, right? And interest rates are low? You'll actually be able to double your money, or in this market, who knows, quadruple your money, just because you're able to take out an absurd amount of money at a low rate, because you can. So that is something that people don't really realize, is the rich could take out loans, use their investments as collateral, and just make more money and use funny money. So as we get into the NASDAQ, NASDAQ tumbled today. I mean, all indices bottomed at around 415, which is somewhat very, very coincidental to me. I find that odd that all the three big indices that I follow, Dow, Nasdaq, S&P, all bottomed out around 415, and then you started to see a push higher. So who knows what tomorrow has in store at this point in time. I don't believe we have any crazy data coming out tomorrow, because tomorrow is, I believe, Tomorrow is Tuesday, what, the 21st? I mean, we have some housing data, so that's pretty much just, obviously the housing market and lumber and all that good stuff, right? If you follow real estate, you probably look into that. I kind of pay attention to some of it, but it doesn't really pertain to the markets. Wednesday, you got some mortgage numbers as well as oil and gas around the FOMC meeting. And then Thursday, we have the job data as well as some PMI for services and manufacturing PMI. So that is going to be something I'm looking for as Friday. Fed Chair Powell actually will speak. So I don't know what to really expect this week. From a short-term perspective, I don't even know if I'm going to make any trades today. I mean, as you can see, the 50-day on the daily right here, right, was holding as support for the NASDAQ, and this has been the first candle that has been below the 50-day moving average since May of 2021. So the fact that this has happened right in May, and now it's happening here. Now we had an intense gap down today. We haven't had a gap down like that in quite some time. As you can see, right, on the daily, I just scrolled a decent amount, and we haven't had a true gap down like this in over a year. So that's something to be worrisome about, as NASDAQ has been on a roll, and it has hit an all-time high, what, like 3 days ago or a week ago, right? Yeah, so on September 7th, so 2 weeks ago, it hit an all-time high, and since that all-time high, it has dipped down. So you don't want to get caught in the wrong thing. But if we keep on dipping lower, I mean, see, this last sell-off, right, in August, this is holding as support at this point in time. And if we dip even lower, I mean, you're going to have to be looking at this 14,492 number to hold as support. And it's still another drop-off, looking at what, almost, not 100, not 100-point drop off, but a decent amount. So if this doesn't hold, I mean, if we retest this trend line back here, that's going to be a major drop. And are we due for it? I mean, yes, but could it happen? No, not at this point, but it definitely could happen. So you just have to be mindful. You always have to play out multiple scenarios, because of the fact that this market is just unpredictable. It really is. When bad news is good news and good news is bad news, you just can't predict what is going to happen that day. That's just how it is. And as we look into the triple Qs, you could see that we're actually pushing higher in after hours at this point in time. And this is something I'm going to be watching, right? So even the triple Qs, we fell below the trend line and even the 50-day moving average. So the MACD is showing a trend reversal, but what is keeping me optimistic here is just because this is above zero still. Yeah, the MACD did cross over, signaling a bearish reversal, but look how drastic that is, right? Like the fact that the MACD is over zero, which if it's in the negatives, right, it's not a real reversal until it crosses this purple line. So there could be a significant bounce, but I don't know. I'm not an expert, and I don't know everything. I just go by what the chart is showing me, because we pulled back on the weekly and we tested the 30-day weighted average. So this is pretty much the pullback zone. And we touched it. We went as low as 360. But like I said, around 415, we had a bounce from that 360 level. So that's a really good sign that we bounced off of that 30-day weighted average as well as the 20-day moving average. And then as we look out to the month, you could see we're kind of thinning out, and volume isn't big. Like, look at the past months, that volume has not been increasing, but we were hitting all-time highs. So to me, we were due for somewhat of a correction. Now, do I think this is a correction? Nah, not necessarily. I mean, it was a red day, don't get me wrong, it was a bloodbath, but I do not think that this was the correction. Do I think it's over? I couldn't tell you. I mean, we could have a green day and rise, maybe we're up 10% and then we go down 15%. So if that does happen, that is going to signal a weak bounce and it's going to be a trap. It's definitely going to be a trap, but who knows? You got the FOMC meeting. That's going to be key, but then you have all the other factors that play into that as well. So let's take a look at the SPY. See, the SPY bottomed out at 415. So the fact that it bottomed out at 415 and it bounced up from 428, closing at 434, and now we're up in after hours. Now if we regain the price level of 435, that'll be a good sign, just because that was when the last dip was bought. And the only reason why is because that will signal strong support at that level, right? Just because this is a red candle and a vicious gap down doesn't mean that tomorrow we can't come back and maybe fill the gap or possibly just bounce back and close higher, signaling a bounce, right? So these are all things you got to take into consideration, because the volume on these red days have been significantly higher than the volume on the green days. So when you're looking at plays to make from a bullish perspective, you have to be mindful of the volume on those types of days. And then as well as the weekly, it's the same thing. Now, the week just started, so obviously the volume isn't going to be high, but last week the volume was just a tad higher than 3 weeks ago. And then before that, the one green was July 19th. Now, maybe I should have looked at what happened on July 19th, well, the week of July 19th, so I could talk more about why that is. But notice how this is the one green candle in the past few weeks that is actually higher than everyone else, as well as so actually they're the same. So that brings some worry to my eyes, just because if we don't see a bounce, that's going to signal market weakness, and we don't want to see that, especially not at this point in time. So Pfizer came out today, right? Now Pfizer was up. So this was a nice little bear trap, because as soon as market opened, it rose. And to be honest, I don't really care for these COVID plays that much anymore. Why? Because I really do think it's a lot of fluff. Buy the rumor, sell the news, right? So just because they came out and said that there's positive news in vaccines for children the ages 5 to 11 necessarily doesn't mean that there's something all good with it, right? There was positive news about the vaccines for everyone else, and bad news still found its way out. So This being up 0.71%, don't really care for Pfizer. I mean, it hit the high, right, when it announced, FDA announced the approval. Or actually, I lied. That wasn't then. That was right around the last week of August that they announced the approval, and that's why I'm over that, because all this approval from the FDA had to be factored into Pfizer's price, because all throughout COVID, whenever vaccine news came out on trials or anything, the stock always rose. So that's why I'm saying you need to pay attention to the volume and what is going on, because from the daily chart, the 50-day, I mean, on September 16th, we crossed down the 50-day moving average, and momentum is showing that we are going to continue this decline in Pfizer. So, who knows if Pfizer breaks out tomorrow? I mean, is that signaling a strong, quote unquote, reopening trade again? Who knows at this point in time, right this second? So, seeing Pfizer break through that 50-day moving average, as well as the 5-day moving average breaking through that, signaling that the momentum is changing downwards. But tomorrow, like I said, Pfizer could bounce up and actually retreat over the 50-day moving average, and then it could keep on rising a little bit and then have another pullback. So that is something to be mindful about if you're looking into any COVID plays. It could be a bull trap. And other ones that I want to get into are some short squeeze plays. So ATR, I ranted about a couple a few days ago, back last week actually. So last week, I mean, we hit a high in ATR about $19.04, right? And since that top out, we had a major pullback. We filled this gap up on that massive pullback on September 14th. And once we caught the trade line, we held support at that $9.10, where the 20-day moving average was making its way up. And then you could see we had that bullish momentum upwards. So to me right now, I am keeping a strong eye. I did buy a position today in ATR at the open, and that was a very good opportunity for me, because I saw it from Friday. So Friday's after hours, right? Friday, let's look at it. So Friday's after hours, we were moving upwards, and then today at 4 a.m. dropped off. But then as soon as the bell opened, the momentum came flying in, pushing the stock higher. But then right around, 415 has been the magical number today that stocks, indexes have bounced off of. So the fact that we bounced off this $11 price, that is good. Why? Because this was previous support resistance, since we broke through it on September 14th. And the 15th, the 16th, and the 17th, we couldn't close above that fib line. And I mean, I should take that back, because we did close above it, but we didn't hold it each day. So the fact that we broke out today and we actually held it pretty strongly, up 6%, and even pushing up higher in after hours at this moment, to me, if the momentum really catches this, I really do think it could run. Reason being is we have some bullish momentum on the weekly time frame trying to cross over the 30-day weighted moving average, and typically when that happens, there could be a short-term bull run. And on the weekly time frame, we do have the MACD signaling a bullish reversal, but it's not confirmed until it crosses over this purple line. And that is where you could get caught doing a stupid trade. And you want to make sure that you're obeying your rules and you don't get caught doing anything that you shouldn't have done, or pretty much your risk shouldn't be outweighing the reward if you are pretty sensitive with your money. So, in fact, we closed at $11.73. Tomorrow, I'm looking at us to test that $13 range again and possibly close above that $12.90 range. Now, if we blow past that, I could see us testing $15, but then obviously I could see us totally pulling back to around this $12.90 range. Now, if that does happen, to me, that is signaling a great buy-in, but it's only if we hold this area right here. That's going to signal strong bullish buying behavior, and a pullback is either going to be because of day traders trading it or shorts are just loading up on it. The short interest on ATR, I don't have on the top of my head, so let me just look at it real quick. Alright, so short interest for ATR is about 29%. Short percent increase is at 16%. So to me right now, a short squeeze could really happen in this stock. And as you can see, looking at the weekly time frame, right, the high was $48.99, which happened in February of 2021. And since then, it's been declining ever since. So if the buying momentum gets in here, like SPRT or any other, or AMC or GME, if it goes crazy like that, we could definitely see the $50 range within the next couple of weeks. But this will only happen when or if the buying momentum comes in strong. And then what will actually happen is the FOMO crowd will start to gear this up and push it even higher. So I could really, if we got to this range of what, $18 like we did on the week of September 13th, or yeah, on the day of September 13th, if we push through that $19, we'll definitely be pushing 20 in a blink of an eye. So that is something I'm going to be watching very, very carefully. And then another one is Smile Direct Club. This one, I actually bought the dip today on this. I was watching this morning. It hit a high of $8.24, and to me, that is extremely bullish in pre-market. I mean, on Friday, it closed at $6.71. So the fact that we hit almost a $2, we went $2 higher in pre-market, and then it just declined the entire time today, that's telling me that there was more short sellers than there was buyers. So the bears definitely took this for the count, as we, the retailers, do not have control of trading between 4 and 7 a.m. So as you can see, 7 o'clock came, right? We were kind of consolidating along $7.21, and then once market opened, we tried to break above 7:30 and couldn't. We couldn't get there. So what that's telling me, right, if you look at the weekly and even the daily, is that there is strong resistance at the 7:30 mark, and we just need to get past there and drive this up to get at that let's say if we get past the 730 mark, this stock will go to about $9 in a heartbeat because of everything that I just said, because of the FOMO, because of the momentum. It just how it is, because if momentum rushes in to a short squeeze play, the short sellers have to or will close out their positions. Either they are getting margin called, so they are required and forced to close out their position, or they said, screw this, I don't want to get caught in this, and then they close out their position anyway to get out, but then they could re-enter, and then that data doesn't come up for 2 days. So the T2 rule is when shorts get returned on a given day. So let's just say today was a big short day. You would have to look at the shares returned on this day on September 22nd. That's when you'll be able to find out how many shares were returned and what the short, and if the short interest changes tomorrow and it increases, that's telling you that the short sellers increase their position on here. So as we're looking into after hours, you could see again 415 was the magic number here. 415 we bounced up, and we have been consolidating upwards in the after hours, holding that 680 range. So tomorrow morning, if we bounce over that, I mean, who knows, maybe we push to over 730. Now that's the key, that is the key number to watch, is 730. We need to get over and close over 730 for this to remain strong and have more buyers running, because the MACD on the daily chart just barely crossed over, signaling a quote-unquote trend reversal. So if this rises more tomorrow, this is going to be a good sign that more people are rushing to buy. But if hedge funds, short sellers, they might have more leverage, or will have more leverage, sorry, I should rephrase that, to keep on adding to their position. I mean, we don't have that type of luxury to do that, right? Because we're retailers, we have rules, and it's ironic. But when you're looking at the 4-hour chart, to me this is still a bullish chart, because we came back, right? I told you from the 30-day moving average, this is the pullback zone. So whenever my short-term moving averages cross above that 30-day weighted average, I am looking for the stock to pull back between this range and to hold. And you could see we did. You could see we went all the way down to what, $6.12, but we closed right at that moving average of $6.28. So we're $6.72. Yeah, so we opened there. I apologize, I was reading it backwards. So we actually opened at $6.33, hit a low of $6.12, but then bounced all the way up, closing at $6.72 on the 4-hour. So that's something to be mindful of on, because the 4-hour second candle captures some after hour movement, as well as the first candle captures some pre-market movement. So you just got to take the pre-market and after hour volume with a grain of salt. And now I want to look at one of the long-term plays that I've been looking at very, very hard. So I mentioned when I was analyzing this around here, around what, September 1st? Yeah, September 1st to the 3rd, we had this pullback testing the trade line and then breaking through it, pulling back to that 30-day moving average where the 50-day crosses over, signaling a bullish movement upwards, right? So This is where I would have bought it depending on this day. Now it looks like it opened at $9.42, closed at $8.08, so we actually gapped open on September 9th. But then since getting to $11.37 that day, we came back, touched the trade line, traded, and now we're above it still. So that's a good sign. But the MACD is signaling another reversal, but take it with a grain of salt, as today, right, you see that we gapped down pretty big, opened at $9.44, hit a low of $8.98. So this is something to be cautious of, because like I said, if you were to get in up here, right, looking when you're zooming out, this is resistance. So the fact that we can't get over this resistance level at this point in time, to me, is showing that this isn't a strong breakthrough and we could end up at $6. So if I was to buy this now, I'm not going to put all my eggs in one basket. I will divide it up into 4 tiers. And the reason being is because if it does dip, you don't want to get caught holding money that you might need, or money that you could put into another stock and make money off of. So you have to be knowledgeable, you have to be disciplined, and you just have to make sure that you are looking at the right signals and trusting your game plan. That's the key to it. You trust your game plan, you follow it, and if you lose by following your game plan, that's fine, because I'll tell you right now, you'll win more than you'll lose if you follow your game plan. That is the biggest thing. You have to stay disciplined when trading. So another one real quick is a good old AMC. AMC took a tumble today, gapped down really hard. I believe what Friday was closed at 45, and it hit a low of $38.87. Now, I did mention that today that we should see, if we see a breakthrough, this $40, $43 range, that we were probably going to see low 38s, and luckily we closed above that. But as you could see, after hours, we are actually down. We're at $39.75. But AMC, from a long-term perspective, it's nothing to worry about now. If I'm looking at the weekly, might worry before I get in here again. And the reason being is because of the support down here at the low 29s to 30 level. Do I think we'll go back there? There's a good possibility, but we'll only go back there if we don't hold the 20 and the 30 day moving averages. But as you can see, we broke out of this little consolidation period, right? We tried making our way up, but there is that high resistance at 51 level. So you have to be cautious when you're trading volatile stocks like this, and that's just something that you'll learn as you do it, because I thought it was easy at first, but it's not, and I made a lot of money off AMC. Really haven't lost a lot of money, full disclosure, off AMC, because I trust my trades. So every time, like right here, right, so the fact that we touched this moving average, I bought in that day, and then when we touched it again, I didn't sell this day, but I sold this day, and that's because I thought maybe we were double topping. Volume wasn't high that week, and then the next day we broke out, tried to break through that resistance and couldn't, but I still made money off of it. And then I didn't touch this again because I knew soon enough from the daily time frame, if I look at August 16th, right? So right here. So August 16th, I got in right here. And then the 17th and 18th, I sold on that red day because I got nervous. And then look at that, we came right back down. I got in again. and then we went right back up. And then I sold as soon as we touched the 50-day moving average, because that showed me that that was a weak breakout and we weren't going to hold it or sustain it. So that's why I got out. And then I've just been watching AMC, haven't made a play, but now that this has dipped back to the 50-day moving average on the daily chart, I will be watching this very closely, as this catches wind. Could be an easy 10 to 15% day. So that's something to be mindful on. Now Tesla. Now Tesla ate it, but what happened? 415 bounced right up. So tomorrow you can see Tesla came back, test the 20-day and the 30-day. Now we closed right around it. So what I'm looking at is to either consolidate and trade sideways for a couple days, or we're going to break through it and we're going to test this 713 level, which is going to be a significant drop off considering from August 27th to now, well, last Friday, we went all the way from 726, or I'm sorry, from 713 all the way to 754, all the way back down in a blink of an eye to almost 721 was the low, or 718 was the low today. So Tesla's another volatile stock, and if you didn't get in for the long term, I mean, now it's treading along the 50-day moving average, because if the 50-day moving average crosses this, then good riddance. This is going to definitely go down and retouch like the 500s, the 550s, and that might be where I pick up more Tesla, but who knows? I'm not an expert. It might still go up. But tomorrow, not really sure what to expect. Futures could be red and we could go green on the day, or futures could be flat and then we go red on the day. I'm expecting to see the same action I saw today tomorrow. See a little bit of red, maybe not a 415 bounce, but maybe the first hour of trading is very volatile and selling off, and then maybe we see some buybacks in and we finish green. Not really sure. I don't like giving that type of prediction out until the day of, so I gotta see what news comes out over time, how futures are playing out, what is the sentiment in the pre-market hours, and that is why I don't like doing that, because things could change in a blink of an eye, and that's just that. So thank you for tuning in. I hope you learned something today, and be cautious, look for the signals, and